building a stock market portfolio is very difficult. I'm giving it a go, trying to build one, be big by 2050. Let's find out what happened last month. Now, there have been quite a few changes to my portfolio in the last month. I need to stick around until the end to find out exactly what happened. As usual, we will start with the change and the updates for the high quality companies. Banco ZK being the largest of those at 2,400. And you can see at the top right of your screen, it's about 1/20th or 5% of my portfolio. And it's just dropped down below that 100% return in January. Still overall look at a plus 90%. As we roll through, see Dropbox actually had a good month in January. And Visa, which is one of my favorite companies, that has also done quite well in the month. Google too, moving towards, or Alphabet I should say, moving towards that 50% return range. And we're just moving down through these quality companies with high returns on capital. Skyworks pulled back a bit in the last month, but over £1,000 in that one. Williams-Sonoma, really good return in the short time I've owned shares in that company. And Adobe, over 50% return on that one now. So looking very good in this quality section of the portfolio. Advance also pushing on. Unilever pushing back towards that 100% return. And American Express really kicking on after hitting the 100% club last time out. Meta, which I've only owned for a few months, but that has done well in the short time I've owned position there. Berkshire Hathaway, owned since 2020, and have hit that 100% return for the first time. So it's a new 100% return club member. And a new position here, up 3% in month. Starter for 10 for 1% of the portfolio. Probably would look to grow that position further. And then the last two, Somero, approximately level on that one. And then in mode, £374, down 20 or so percent. So that's the what I call the high quality section of my portfolio, high returns on capital, low chances of failure based on the metrics. Now move to the dividend part of my portfolio. And Unum Group is my largest holding, almost £2,600 and over a 150% return for what is a relatively boring company. Viva, sitting pretty level, £1,500-ish, almost 50% return. And Legal and General, again, one of the bigger holdings here. Investec staying around that 300% mark. And a good month for Citigroup, now back in the green on that one. Used to push American Tobacco pretty steady. Good month, plus 500, up 32%. And Direct Line hovering reasonably close to that 0% mark, but is slightly negative. And that concludes the dividend part of my portfolio, which you'll notice is quite a bit smaller than it has been in the past. So some of those holdings have been sold, which I'll run through at the end. Onto the managed part, so a bit of protection against my ignorance in case I make bad choices. At the top of which is Fundsmith, over £2,000, and that I'm adding every month into Fundsmith. Excellent track record. I really like the investing philosophy. Terry Smith, book is outstanding. Highly recommend a read. FTSE 100, not doing much as you'd expect. Then sell Train, over 100%, doing well on that one. US index, up 37% on that. And FTSE 250, that's going okay. Smaller companies fund, no particular change on that one. Move through these now, these index funds. There we go. Value index at 20% up. Move to the cyclicals, very sort of tactical plays, a small part of the portfolio where there are obvious kind of cyclical special situations. And we've got this here, Alpha Metallurgical Resources, Met Coal Miner, £1,600, and that's doing remarkably well. Really, really good month on that one, up over 200 percentage points. Intel has, that should be red there, but that's pulled back, so down 13% in months, so down 30% in total. Bitcoin has done pretty well, up 10 percentage points in the month, so it's looking green at the moment. And then Ethereum has not changed over the month. And we just get to the smallest holding. Now onto the uncategorized ones. I've trimmed my Alibaba position slightly, overexposed to them, down 50% overall. So I'm just going to progressively reduce this exposure over the course of the year. Courser's a similar story, down around about 50%, as is Cumulus, and a couple of the laggards at the end. So the question is, where does that leave me? But before we get there, shout out to Patreon supporters. There's also a Discord if you want to join us, get some good ideas, share your thoughts, chat investing, very welcome to. So at the overall level, last month, the portfolio was 48.5, and it is now 49. I want to be, by the end of this year, around about 54. But in the month that's just passed, in January, I got up about £500. Part of that's due to the deposit, which is the minimum monthly amount of 300, and part of that is due to the performance. So positive month. Very happy with that. Now, what that means is to get to that by 2050 with that 300 a month, I need to get 9.62% per year over a long period of time, over another 26 years or so. A good challenge. It challenges discipline and attention to detail as much as anything. Here's the overview of the portfolio. So quality companies there. I want that to be much higher than it currently is, but there's this very large cash position. So a lot of that position will go into that quality company section. Cash quarter, it is too high. I want to be closer to fully invested. I need to identify the companies, but also make sure I'm not overpaying. And then we've got the other sections, as you can see here, and cyclicals is just under 5%. Wow, so we have sold quite a few positions in the last month. Big changes. Kelly Partners position I've held for a few years, sold completely. It's an Australian company. Got a really good return off them, made good profit. However, they're growing a lot through acquisition of debt. The interest cover was down, and I thought I do need to reduce the number of positions. I'll take that profit on what is a very small company, because there is that small risk there around the debt and financing. And I've got other companies in there that are almost certain not to fail, touch wood. Duke Royalty, again, a much smaller company, this time in the UK. Made a good return off that, both in dividend and capital. Double figures percentage points per year average. Same Kelly Partners. However, again, wanted to reduce some of the positions. It was a very small inconsequential position. And again, just looking at the sort of finance side, interest cover and what have you isn't quite where I want it. There are lower risk companies in the portfolio that are of equal or certainly higher quality, so that went completely. City of London Investment Group, again, went completely. It wasn't in my top 20 ideas there. BT, certainly, again, look at the metrics, didn't pass the metrics. That went. Trimmed a bit of Alibaba, as I said. Ramaco, cyclical company, made a lot of money, I think 400% plus on that one. Very happy to take the profit. And S4 Capital, not in the top 20 positions. Not so good, again, on things like the sort of debt side of things. Not happy with where they're going. So close the position. It's not a high quality company. There were some buys. My usual monthly into Fundsmith. I did add a bit to my US index, and the new position Fortinet as a brand new holding, which we saw earlier. So you can see we have added one but lost quite a few positions there. The portfolio is smaller, it's easier to manage, the average quality is higher. Fortinet is a higher quality company than all of these that are sold, in my opinion at least. So we're very happy with that. Still want to consolidate the portfolio a bit more, but it's looking good. I'm very happy with how it's going. I'll drop up on screen now at the end the kind of the tree map view of the portfolio. If you've got any questions or any investment ideas, I'd love to hear them.